Bitcoin's resurgence, a sign of the times? The financial world is abuzz. Bitcoin, the world's leading cryptocurrency, has staged a remarkable comeback. Surpassing the $85,000 mark, it signals a potential shift in the global financial landscape. This surge is not merely a blip on the radar, it's a powerful indicator of changing tides. Investors are flocking to Bitcoin as a hedge against inflation and economic uncertainty. The traditional financial system seems to be faltering. Central banks are printing money at alarming rates. Interest rates remain stubbornly low. In this climate of fear and doubt, Bitcoin shines as a beacon of hope. It represents a decentralized, transparent, and secure alternative. This is why savvy investors are taking notice. This recent price surge is not just about numbers, it is about a fundamental shift in how we perceive value. Bitcoin's decentralized nature challenges the status quo. It offers a glimpse into a future where financial power rests in the hands of the people. As we delve deeper into this phenomenon, one thing is clear. Bitcoin is no longer on the fringes, it is at the forefront of a financial revolution. Bitcoin's resurgence has ignited a rally across the entire cryptocurrency market. Ethereum, the second largest cryptocurrency, is also experiencing significant gains. Its price has surged past its previous all-time high, exceeding its current price. This surge is driven by the growing popularity of decentralized finance or DeFi, and non-fungible tokens, known as NFTs. XRP, the cryptocurrency associated with Ripple, is also making waves. Despite regulatory hurdles, XRP has seen a resurgence in trading volume and price. This renewed interest stems from Ripple's success in expanding its global payment network. Solana, a high-performance blockchain platform, is another notable performer. Known for its speed and scalability, Solana has attracted significant developer interest. This has fueled demand for its native token, SOL, which has seen impressive gains in recent weeks. The overall picture is one of bullish sentiment. Investors are pouring into the crypto market, drawn by the potential for high returns. This renewed enthusiasm is a testament to the growing maturity and adoption of cryptocurrencies. The recent surge in Bitcoin's price is not solely driven by retail investors. Institutional players are entering the market at an unprecedented rate. Companies like MicroStrategy and Tesla have added Bitcoin to their corporate treasuries. This institutional adoption is a key factor behind Bitcoin's growing legitimacy and value. Melius, a Brazilian cashback and rewards platform, recently announced a significant investment in Bitcoin. This move is particularly noteworthy as it signals growing interest from emerging markets. Kraken, a leading cryptocurrency exchange, has also reported record trading volumes. This surge in activity suggests that institutional investors are increasingly using Kraken's platform to gain exposure to Bitcoin. These institutional moves are not just about profit, they represent a fundamental shift in how these companies view Bitcoin. They see it as a strategic asset that can hedge against inflation and diversify their portfolios. This institutional adoption is still in its early stages, however, it has the potential to drive the next wave of growth in the crypto market. The regulatory landscape for cryptocurrencies is constantly evolving. Governments around the world are grappling with how to regulate this new asset class. While some countries are taking a cautious approach, others are embracing the potential of blockchain technology. In the United States, the Office of the Comptroller of the Currency, or OCC, granted Anchorage Digital Bank a national charter. This landmark decision recognizes Anchorage as a full-fledged bank. It allows them to offer custody services for cryptocurrencies. This regulatory clarity is crucial for institutional investors who require secure and regulated custody solutions. Another significant development is the establishment of a strategic Bitcoin reserve by some governments. These reserves are intended to diversify national treasuries and potentially hedge against the risks associated with fiat currencies. This trend further legitimizes Bitcoin as a store of value. It could lead to greater adoption by nation-states in the future. Section 5. Market sentiment, a cautious optimism. The recent price surge has undoubtedly injected a sense of euphoria into the crypto market. However, seasoned investors are tempering their enthusiasm with caution. The market remains volatile, and corrections are always a possibility. Eltican Asset Management, a prominent hedge fund known for its early investments in Bitcoin, has expressed cautious optimism. While acknowledging the positive market momentum, they emphasize the importance of risk management. They advise investors to diversify their portfolios and avoid chasing short-term gains. This sentiment of cautious optimism is shared by many market analysts. They recognize the long-term potential of cryptocurrencies, but they also warn against the risks associated with this emerging asset class. It is essential for investors to stay informed, manage their risks, and approach the market with a long-term perspective. Section 6. AI Predictions, Decoding the Data. Artificial intelligence is playing an increasingly important role in analyzing and predicting market trends. AI-powered platforms are leveraging vast datasets to identify patterns and generate insights that can inform investment decisions. These AI models take into account various factors, including transaction volumes, network activity, and social media sentiment. They can identify potential buying and selling opportunities, providing investors with a data-driven edge in navigating the volatile crypto market. For example, some AI models are predicting a continued upward trend for Bitcoin based on increasing transaction volumes and growing network activity. These models suggest that the current bull run is not just speculative frenzy, it is driven by genuine demand and adoption. Section 7. Whale Watching, Deciphering the Movements. In the world of cryptocurrency, whales are individuals or entities that hold large amounts of a particular cryptocurrency. Their trading activity can have a significant impact on market prices. Tracking whale movements is therefore crucial for understanding market dynamics. AI-powered tools are now being used to track whale wallets and analyze their transactions. These tools can detect large transfers of Bitcoin from private wallets to exchanges, which often indicates an intent to sell. Conversely, large transfers from exchanges to private wallets suggest accumulation. By understanding these whale movements, investors can gain valuable insights into market sentiment and anticipate potential price swings. However, it's important to remember that whale movements are just one piece of the puzzle. They should be considered alongside other factors when making investment decisions. Section 8. The Exchange Effect, Reserves and Resistance. Cryptocurrency exchanges play a pivotal role in the market. They act as intermediaries, facilitating the buying and selling of cryptocurrencies. The amount of cryptocurrency held in exchange reserves is a key indicator of market sentiment. When exchange reserves are declining, it suggests that more people are withdrawing their Bitcoin from exchanges and holding it in private wallets. This is often seen as a bullish sign, indicating that investors are confident in the long-term prospects of Bitcoin. Conversely, increasing exchange reserves can be a bearish signal, suggesting that more people are depositing their Bitcoin on exchanges, potentially to sell. Monitoring exchange reserves, along with other on-chain metrics, can provide valuable insights into market trends. Section 9. Conclusion, Navigating the Bitcoin Boom. Bitcoin's remarkable resurgence to $85,000 is a testament to its resilience and growing acceptance as a viable asset class. The cryptocurrency market is maturing, with institutional adoption on the rise and regulatory clarity slowly emerging. However, it's crucial to remember that the crypto market remains inherently volatile. Prices can fluctuate wildly in the short term. Investors should exercise caution, diversify their portfolios, and avoid making rash decisions based solely on market hype. As we navigate this exciting new era of finance, one thing is clear: Bitcoin is here to stay. Its decentralized nature, limited supply, and growing adoption make it a compelling investment opportunity. While the future of Bitcoin and the broader cryptocurrency market remains uncertain, one thing is certain: the journey ahead will be filled with both challenges and opportunities.